Well, good morning, everybody, and welcome to October 11th, 2019, to the pre-market rundown for TriggerCharts. I'm Andrew Horowitz, and thank you for joining me. It's been a pretty interesting ride over the last week. We talked about a lot of things last week and levels that seem to play out pretty well when it comes to the overall market. And we're trading in this weird pattern right now. It's sort of like Monday, Tuesday, Wednesday is just thrown out. Thursday, the markets start coming back, and everybody's all excited on Friday for some big news or so. But there's a few things that are definitely leading the market in terms of some of the headlines and, of course, the technicals. We're going to go over a lot of that today, answer your questions as well, talk about some of the stocks that you are interested in, and we're going to just make a go of it. A couple things to note. Make sure you understand this is for educational purposes only. This is not a buy-sell recommendation of any sort. Anything that we talk about here is not a recommendation. Of course, investments carry a good amount of risk, so it's important that you are understanding that this is, again, just a platform for us to teach a little bit more about the whole idea of technical analysis plus insights into what's happening with the markets. One of the things that you could do, of course, any of the indicators that we do talk about here are related to TriggerCharts, available exclusively on the TradeStation Trading App Store. And you can get those in the little box below there in the chat. I put a link. There is a 10-day free trial. One of the nice things to know, and it's important, I think, for everybody to know here, is we are at the top of the number one, actually at the number one slot, for highest reviews and overall satisfaction with our indicators, particularly the Commander series. But there's a good amount of information also available on the TriggerCharts.com website. This Friday pre-market rundown is always recorded. It will be on the YouTube channel for TriggerCharts as well as the website TriggerCharts.com. So you can check it out any way you want. There's some great tutorials over on TriggerCharts.com information. And of course, last thing I'll mention about this is we had that great upgrade, the newest version of the TriggerCharts Commander Series. Version 12 came out about a week and a half ago, and a lot of people are really liking it. What we did was a few optimization, a few behind-the-scenes things to really make the indicator work a lot faster. But more importantly, there's a new alerting feature that allows you to alert one particular time frame, multiple time frames, all the stocks and symbols that are in your radar screen, or just a group of them. And that gives you the ability to pretty much step away, not have to look at what's going on, and have the radar screen tell you exactly when the bias shifts to a short alert or a long alert, and gives you plenty of information to utilize. So we have a really good group here today. Thank you for joining me. And just a quick, as I just went through all of that, everybody can hear me just fine, hopefully. But just let me know that. Looks like okay. All right, perfect. All right, so what's going on? Let's kind of talk about this a little bit. Well, we have a skinny deal, they're calling it now. There's always got to be a name, right? There's always got to be some kind of a name for something, whether it's what the Fed does. We have Operation Twist. We have Q, symbols and names and acronyms. Well, right now we're calling it a skinny deal. Maybe the U.S. will agree to postpone some of the tariffs on China for the time being, at least the October 15th increase in tariffs, maybe the December 15th as well, for more agricultural products and maybe an agreement on currency management. And then we'll get to the things that are really important later. Problem is, I don't really think that's possible. What I mean by that is we may enter into some deal where we allow for a very short-term relief of tariffs, but the idea is President Trump wants a good deal, and that has nothing to do necessarily with just agricultural products and the purchase of those from the U.S. to China. It doesn't really have to do necessarily also with the deficits and the amount of trade imbalance that we have with China. What they're really focusing on is intellectual property theft and all the things related to how companies are supported by China and their unfair practices in business. That's what the trade war is all about. And if we give in to China at this point and we say, you know what, we'll just relieve some of these tariffs for, a little while, they're never going to come back to the table and do the harder things later. Or they may come back to the table and stall up, but then what's going to happen? Tariffs will be implemented again. And I think this is really something that we have to realize, that we're going to be in this kind of market condition for a long time to come. We also noticed that the U.S. economy is showing some signs of strain. We've seen that the ISM, we talked about this a few times, both the service and the manufacturing numbers came out very much below levels, and that's extrapolating a GDP of somewhere about 1.3 to 1.5% for the next quarter. We've seen also that inflation, which was starting to build for a while, has now turned to deflation. The latest PPI numbers and CPI numbers confirm that we are starting to move backwards, and therefore the Fed is mainly looking at this as something that they can hold their hat onto, or hold their hands onto, or kind of grab onto. And there's probably going to be another rate decrease or a cut at the end of October. Estimates are that we have about an 80% chance of a rate cut at the end of October, and probably one more in December. So the Fed is basically unwinding everything that they did over the last year that really caused the markets to get angst towards the end of 2018. And now we're entering into next week, earnings season. We have the banks and the major financials that will be reporting next week. It'll be very interesting to see what happens with TD Ameritrade and Schwab and E-Trade. All these companies recently cut their commissions to zero on stocks and ETFs and, to a degree, options. We're also looking at the KRI back to neutral. Let's take a look at that right now. You can see that the KRI, and this, I may be covering this up a little bit with my video right now. But basically, the KRI, you can see down here on the bottom, is back to zero. We did get a little overbought. Let's take a look at that. We did see, oversold, and we saw those points as really good entry points back. You see how well this really looks for these oversold levels in the markets, psychological and some technical levels that really point to the idea that, these are good buying opportunities, buy the dip opportunities, if in fact that buy the dip mentality is still there, and it is definitely alive and well. So we did see that that is something that's interesting. We have an equilibrium now, and right now what that means is you get back to general trend. General trend has been choppy, so it really is not telling us much more than the fact that there was a really good buying opportunity at these low points when you got this cluster formation, a -4 on the bottom of the KRI like we've seen before. Let's take a look really quickly while we're here. Well, that's not going to work. Let's go here. We see that the YM, the Dow Jones Industrial Futures, the minis are at 242 plus. The SPOOs, or the S&P futures, up 26. The NQs are up 75. Gold's down about 10. And oil's up about 42 cents on that recent bombing that we saw something happened with a ship in Iran, and Syria's obviously invasion there by Turkey. And let's just say there's a little angst in the Middle East. What's going on right now? All right. Let's get back to what we were talking about here. No, not that one. There we go. Of course, the impeachment process is heating up. There's all sorts of things happening. We saw there's some more. We saw 2 arrests with friends of Giuliani, something involved with some campaign finance issues. And this is obviously, we're going to see more subpoenas. We saw that Rick Perry, the energy secretary, was subpoenaed yesterday as well. Giuliani was subpoenaed. Information was requested for the White House. They're stonewalling. Whatever this is, it is a concern for markets that there is a seemingly a period that there's going to be at least this questioning and this process going on that Congress is very interested in doing. And as I mentioned last day before earnings season. All right. I mentioned this. Today, coming out today is import and export prices. Or came out today, they were pretty much flat. That was at 8:30 this morning. University of Michigan is going to be at 10 a.m. So that's important. Next week, we have retail sales, business inventories, housing starts, and leading indicators right in line with the earnings season. That's going to be coming out as well starting next week. Stocks to watch today. We're going to talk about BBBY, Bed Bath & Beyond. It seems to have these major pops, then realization hits back, and then there's a drop. TD Ameritrade, crude oil, TLRY, crude oil is starting to drop a little bit here. It was up about 1% earlier at 54 and change. It's dropping. You see this reversal right here from where it was at 50. Actually got up to about 54.90. It's coming in a little bit. There's a position we actually took a couple days ago. I'll show you why we took that position. We'll probably move out of it today on this drop. If you haven't noticed, the marijuana stocks, the pot stocks, have been crushed. I mean, just obliterated for many, many reasons. Remember, this was one of the hottest areas along with the whole blockchain. Remember that whole blockchain move that stocks made for some time? Well, the marijuana stocks really got hammered recently. Let's take a look at what's going on here. What do I want to? Okay, let's focus on the SPY for a second here. So what we have here is the SPY. Oops, get rid of that. We have the SPY, and this is on the left here. This 60-minute chart, but the daily chart I really want to focus in on. We saw it get right up to a resistance yesterday, about 293. It looks like it's going to open up about 296 today, right about here. Which you can see if we just draw a line right across. Very simply, that there is a good amount of resistance at those levels. So let's kind of go up to our little line tool, kind of look right about there, and pull it right about there. Actually, a little bit higher, about 296.25, I'll call it. There is some resistance at that point when we connect a bunch of lines from this side of our altimeter. These are, of course, the algorithms based on a market profile that does volume and price. It's really important because we could really understand where people, investors, and institutions are buying the stock. And it really gives us some information and insight about that. 296.27 looks like there is some overhead resistance at that level. And then also I think it's important to look at this and to notice that when we have, I'm going to do a quick circle here of something. You know, look at this range right here. Good amount of congestion in that area. Now, when you see a lot of congestion in an area, that means there was disagreement with price. You know, we're trying to bring it up, trying to bring it down, trying to bring it up, but getting nowhere. Kind of like, you know, pushing against a wall that somebody's pushing back on the other side. One side gives in a little bit, or a tug of war. Kind of, you know, you're going back and forth, back and forth. You know, sometimes you get a little bit more on this side. Somebody digs in, get a little bit more on that side. And what's happening now is we've seen that this tug of war is going on, and that is generally called a consolidation zone. And we're seeing that right now in this area that we are finding. About up to, I would say about the 297 and a half level on the SPY, which is the S&P 500 ETF. So if we do in fact break up and hold above at this point, I think that there is the opportunity for us to move up a little bit. But again, there is a lot of congestion in all of these areas here, all throughout, as we look historically. It's really important to always look left. Yeah, I've taught you that over this time in all the videos that we do. One of the things that I've really tried to bang home and make sure that you really get into your total process is the idea of looking left. It's simple. It's very simple, but it's something that's really important to do. You need to always look left to understand where we have been and where those marks are being laid in the sand, where those levels are that they wanted to have historically. Because while investing is a day-to-day, possibly moment-to-moment situation, depending on what your time frame is, the reality is that the marks that are left, which are the bars that we see on a chart, these are the history of where people are playing on the long side or on the short side, or in the neutral area where they're not involved at all. And it's important to understand that that doesn't just go away. Yeah, we may wake up every day with a new idea, a new stock, a new area, but when it comes to major markets, there is an indelible mark that is left on the chart that we have to respect. And those areas are areas that when we come up to those, oftentimes there's an emotional aspect to this. When we get to a previous high of a stock, there is a lot of people that may have gotten in at that point because they thought it was going to really go. And if a stock drops 20%, they wait to get back. Then they're like, if I could just get back to that level, I'm out. There's a lot of people that along the way, as you go through the process of building a price, whether it's up or down on a stock, what's going to happen is they're going to look to actually find those levels of, I can't take it, I'll hold it for a while, but then I'm going to get out. That's why we have these multiple top areas when we look at a stock chart. These are areas that people have said that they tried to get in on, they thought there was going to be a breakout, they got this major move on the downside, and then they're just waiting for this to start moving up again, and they're saying, okay, if I could just get back up to here, I'm going to be so happy, I'm out. You've done this. We know what it's all about. It's human nature. It's the psychology behind what's going on in the markets. And then maybe what's going to happen here is that we see that it rolls over again. And when that happens, there is the opportunity to realize that, you know what, there really wasn't a lot of strong hands. There was a lot of weak hands up at those levels, and it's important to understand that. So like I said, right now we have this 26.27. Keep that in mind for where the S&P is, and if in fact we can get to that point. On the Qs, looks about the same. Right now, it looks like the Q is going to open up at about 190.67. Now, look at that. This is a line that we drew in some time ago. This is not something I put in today. This is a while ago. I laid this line in here. Stays on the chart. These two lines, what's interesting about this, right up here at 193 and what, 60, and down here at about 185, that was the range. Look how well this range has been respected. And what I simply did was I looked for, and I probably zoomed out a little bit, but I found upper levels of the altimeter, which is the red line, that matched across going left historically, where there was a good amount of volume that was, in fact, resistance. We have to respect that. And I looked to find where the bottom line was, where there was a lot of support. This support goes all the way back to August, this blue line, which is our point of control, our high volume node, if you will, where the major action is inside of this range that we drew for you. And if you just are able to look at colors, if you're able to look left, that's all you have to do here. So we draw these lines and we see, look at this, came right into that line, bounced off. Came right into this point, bounced off, and now we're starting to move up again right at the top of the range. So right now at 190, actually 190, I take that back, it's 190 and change. So it's right here, this one right here. That would be the top range where it can't get to. We did peak out once before. Let me get rid of some of this drawing on here. All the drawings are gone? Okay, good. Earl. So Earl oil, let me focus in on this for a second. I want to really focus in on a couple of charts. I want to focus in on the short term. We saw this flush down below the 52 level, but holding. And once again, just grabbing a quick tool here. Just look, there was some really good support. Actually, we draw the line, we see different points of touch. It's not exactly drawn, but getting there. In the areas that there was very little, but once we were able to hold this 52 level, that looked like an interesting area that was good for the stock there, for the oil right there. But more so, I really want to focus in on this daily chart, because when you look at this, there was really good support back down to 51.84. We'll call it 51.81. When we saw that bouncing off there a few times, we took a position on the low right about here, about 3 days ago. And it started to move up very nicely. Remember, some oil trades 24 hours, so this is not exactly your daily. It's kind of shifted a little bit. But nonetheless, what happened was we took a position right here, and we're up about, I would say, on oil about 3.5%. 3.5% on the position right now. We're probably going to cut this position going into the weekend. This is no reason to be there. And because we're also in a consolidation zone. So the other ways that you could use these lines is for a bouncing point if there really is good support on the unfair low or the support line, the green, and short it on the unfair high or the resistance point on the top. So you can play on the inside as well. Play if it's just kind of moving back and forth inside. Remember, right about here, remember that was that crazy move, that spike and short squeeze that happened overnight on a Sunday, when we started to talk about what was going on with Iraq and just, Iran and just the mess that was developing there with Saudi Arabia, that they bombed them and droned them and all that. Gold is down about 70 basis points today. Gold kind of hanging in there, but definitely. Can anybody tell me what's interesting about this chart? Take a look at this. What's happening here? Anything interesting when you look left on this? As you're telling me that, I'm just going to go up here and show you something. Yeah. Yep. All right, so there's nothing here. This area, there's pretty much a hole. So if we break down, I would expect that we probably see about 1450 at the bottom end of gold right now. So if gold continues to move down, I would expect there's going to be the potential for a drop, because when we have a hole, and when we look at this range here, it's not drawn right. A little bit lower than that, but basically there's this gap here. And when we look at that area on this messy chart that I just did, okay, let's just draw it right here, right there, right here. Look, pretty much a gap. There's nothing. We have no altimeters drawn in this area. There are no lines that we put there. Therefore, the potential for a drop, so right now at 1490, holding support really well. But I would say that the potential for a breakdown into the 1440 area is very possible. And that obviously would do a lot of damage to the gold miners as well. All right, let's go to some of the things we want to look at today. I can't say anything good about this. This stock is a disaster. I mean, it's up because of a change of a CEO. The target CEO is moving to the company, fine. But, you know, we've seen these breakouts before. We've seen these major moves before on either earnings or the possibility of a go-private deal, private equity taking them over, and then it just drops down from $19 in April down to, where to go down to, like $7.50. Now we're popping up. Nothing good to say about this. Just want to show it to you. TD Ameritrade took a major plunge. Look at this. This stock, this is just horrendous. I'm going to focus in on this. TD Ameritrade is gaining some support right now. It took a 28% drop in one day on the news that they were going to drop their commissions down to zero. So what do we do with this? Well, a good amount of their revenue is from currently from, I would say I think it was about 20% of their revenue, approximately, was from commissions on stocks and options and ETFs. They'll find other ways to make money. But what's really interesting about this, and if we really punch this in and get close, you'll notice there's only two lines here, right? There's only two lines on this area. So let's look at this. We have, if I can get my little thing going here, we've got two. What that means is that the unfair low is hidden behind the point of control, telling me there's major support of this area. If we can get above this, I think there is potential to move back up to, 37. Not a big deal compared to where it was in the 40s, but I would take that opportunity. Right now it's trading at about $35, so it is starting to move up inside this range. And I think that there'll be some investors that are thinking that this is a takeout candidate or a merger candidate with another firm so that they can merge their books and bring in, the opportunity really for them is to merge their books with some company, whether it's Schwab or Fidelity, or maybe even bring on a smaller company into their ranks. And what that could do for them is bring a lot more money under management and efficiencies, major efficiencies, cost efficiencies across the board. So I think that is the potential for a buyout. All right, let's clear this up. Clear that up. Go back to our mouse. Let's look at, we talked about crude. Continue to move down. I don't think crude's going to hold here today, actually. Some of the stocks in the area, this is just awful. Canopy Growth, look at that. From 50 down to 20, about a 60% chop in the price. We called a short here to 26, currently trading at, what, $20? Been short calls all the way, short, all the red. Yellow is a short alert, giving you the opportunity to look at, that there is something there. You look at the MJ, which is the ETF, Alternative Harvest ETF for this, down from 38 down to 18, about a 50% chop on this also. I don't even see any long, here, one little long call in September, but everything else has been a short call on this. Trade Desk getting a major upgrade today. Trade Desk has a bit of a head and shoulders, kind of like this, little on an angle. Head and shoulders pattern that developed. This is a good support zone right here. We actually picked some of this up right about, I would say, probably right close to where it is, at 185, I would say, 187. It bounced off that level. This was a darling for a long time. I mean, in 2019, just the beginning of this year, went from about 110 to 280, dropped about 35% into support here. And if you kind of drew a head and shoulders and then a neckline here, and then you took the neckline and doubled it down, you'd get to about a price point of where it was about 184, 185. Now that we see support that's developing there, there's something I think that's interesting to play out. However, realize something. This is a growth-oriented stock, and when growth is not in favor, you got some real problems there. I'd like to take a look at some of your stocks here. All right, good. That's what I was looking for. Thank you. Got a couple here. Greg. Microsoft. It's waiting for data, but it doesn't matter. We're going to use the daily here. Microsoft just, let's go back. You can see right on this area at the latest, we have the potential for, it's been consolidating. It's not showing anything. It's right going, pretty much looks like what the markets look like. There's a gigantic consolidation from August where there was no trade. You see that? This giant move that there was just no trade there. And then what happened is you started to get this potential lift. We saw it drop down into support, kind of held those support lines really well, moved up, bounced down again after resistance hit. Now we're getting into a breakout. Clearly, Microsoft has to get past the 141.5 line. We'll see. We got earnings coming up not too long, so it's going to be a big issue. DocuSign. Let me clear this off. And by the way, I'm going to put the little word, I'll put a couple things in here. There's that. But type in here any stocks or symbols that you want me to look at. Let me click that right there. And this is, by the way, you're looking at what exactly the Commander Series looks like, and it's very easy to understand once you get looking at this. It may look like there's a lot happening on the screen, things that are bouncing around, things that are, in fact, changing colors. It becomes very easy to understand exactly what's going on once you get used to it. It's like anything else, like riding a bicycle. Once you kind of get how to balance yourself and what to look at, this all of a sudden snaps ideas right into your head. So you could put, for example, Microsoft on here. It's going to take a second. And what it's going to do is going to populate all the different time frames. Right now we have 30, 60, 120. It's long alert, which is showing us here on the daily, but really consolidation in every other position right there. So let's go to DocuSign. DocuSign's a relatively new stock. Approaching, if not at, all-time highs. Really? I didn't realize it went to, oh no, it's got a little bit more to go. DocuSign, we kind of look at this. We're approaching those all-time highs, triple top. Could move. I think it's a great stock. I talked about this for a long time. I gave this as a recommended pick on a podcast, Frank Curzio's podcast, a long time ago. I said this is one of these companies that you really want to keep a watch on because one of the things it has is recurring revenue. Once you get into their trap, I know this from personal experience. Once you use their product, you really can't get out of it. You don't want to get out of it. It makes life really easy. It makes the whole process of delivery of information and circulation and historical reference of it really easy, really easy. And the management of the tools that they have are unbelievable. So DocuSign is a great mousetrap. I really do like it. And I think that's something that is going to do well, and people understand that, and they'll keep on paying their numbers to it. It is in a breakout form. You see that we do have a breakout on the weekly. I don't see much resistance here. If the markets can cooperate right now, we're looking at opening about 68. Let's kind of look at that, 60, close to all-time highs. So you could see this break out and do very well. SWKS, sealed with a kiss. I don't know why this is not loading fast today. Oh, there we go. SWKS. Yeah, this is one of the companies that is really works with Apple on, I think they have their antenna arrays and they have a variety of communication equipment products. And obviously if we see some kind of resolution to the whole China thing, and we see that smartphones and phones are selling pretty well, this company will do pretty well, unless, of course, the one problem with any supplier to Apple is that Apple comes out with a competing product that they just shove in there. But take a look at this and we see that there is, in fact, a little bit of resistance at this level. Right now, it looks like we're going to open up about 86.10. So that's way up about here. So you have a little bit of an opening right here. I don't see much overhead on this stock. Let's kind of back it up a little bit. I mean, there is a little bit in this range. I guess you do have some of this looking left. We have some of this, but generally speaking, I mean, you're in a no man's land right now. What I mean by that is really can go either way right now. So we do have a breakout yesterday, and there was a long call on this yesterday, midday, I believe it was. And you see how that did spike up, and you see the yellow that's happening there. The problem with this is, though, that it's either going to ramp and do really well or just come right back down to support, which is back to about the level, I would say, right about 81 and change. Reason for that is that you really have nothing here. That means it's a fast zone both sides, right? Fast zone up or fast zone down. Right now, it looks like it's in a trend and trajectory to go higher. We have time for one more. Yep, we have time for one more. Now look at this beauty. Wow. Look at that. Copa Software. You're in a buy recently over 140, 152, came into a buy. There's a long alert that was stipulated here. Right now, it looks like you can open up at 155.19, which looks to me, yep, it looks almost at the all-time high. It's above the all-time high closing if it closed right there. But you do look like you have a very constructive chart right here. I don't really see a lot going on. All this was due to market noise that happened, of course. But all of these also are very susceptible to what's going on in the market. So just realize that. Once again, the market is now, hey, there we go. Market is now open. Join us next Friday. Check out the indicators, 10-day free trial on all these. I want to thank you very much for joining me, and want to tell you that we will be back next week with the Friday morning pre-market rundown. Thanks so much.